Hi, and welcome to this week's version of Terry's Tips. You know, we're coming up on the calendar's year end, so I thought we'd do a subject that has given us a lot of questions here recently, and that is the difference between a traditional IRA and a Roth IRA. So by the end of this 5-minute brief video, you will understand the difference between a traditional IRA and a Roth IRA, the difference between a contribution and a conversion, and then how each one is going to affect your retirement, because they both have advantages and disadvantages. So let's dive right in. Let's talk about the traditional IRA. The traditional IRA is classified as a pre-tax qualified retirement account. And all that simply means is taxes have not been paid yet. So this does not mean tax-free. This is tax-deferred. So when are your taxes actually deferred to? They're deferred to when you actually pull the money out and take possession of it, or when you reach that magic age of 70 and a half, then you are required to take what they call RMDs. That is a required minimum distribution. Now, the traditional IRA is a very effective tool when it comes to retirement planning because it can lower your income level, and we'll talk about that here in a few moments. But let's talk about the Roth IRA. The Roth IRA is what they call a post-tax retirement account. And all that simply means is we've now already paid the taxes on the money, so therefore we do not have to worry about taking any required minimum distributions later in life. After 5 years being into a Roth IRA, the principal and the interest are tax-free. So that could be a really great value later in life when you're needing income and maybe you don't want to pay extra taxes. So let's talk about the difference between a contribution and a conversion. A contribution simply says, this is how much money I can contribute to the plan. The rules are very basic. If you're under age 50 and you qualify, you can contribute up to $5,500. If you're over age 50, they have a $1,000 catch-up contribution, which means you could contribute up to $6,500 if you qualify. That is both for traditional and Roth IRAs. But a lot of people, they don't understand that when they no longer work, they can still do a Roth IRA. Because it wouldn't be called a contribution, it would be called a conversion. So there are no earnings limits on Roth IRAs for a conversion. So that means if I pay the taxes on the money, now that money can go into a Roth and it is tax-free. What would be the benefit? Well, the benefit is simply this. If taxes are really low right now, well, in the future, I may need extra money. Well, they may raise taxes in the future, so I wouldn't want to pay taxes on that money. So if I did it when I was younger, then I don't have to worry about when I get a little bit older. And that is very key component to retirement planning because a lot of people think taxes are going down later in life, and in actuality, they go up. We don't know what the tax brackets are going to be, but when you got to take those required minimum distributions from a traditional IRA, it will raise your overall tax brackets. So let's look at an example. And we're going to show you how each one works. Let's say I made $100,000 and I put $6,500 in a traditional IRA. My income for that year would only be $93,500 because I get a tax break for doing the traditional IRA. If I put that same money into a Roth IRA, I don't get a tax break. But later in life, when I need the money, the taxes have already been paid. So how does that benefit me? Well, if I die, my beneficiaries won't have to pay taxes because I've already paid the taxes on the money. And if later in life I need additional cash, I have some other accounts that I can turn to where I've already paid the taxes on the money. So there you have it. You have the difference between a traditional IRA and a Roth IRA, the difference between a contribution and a conversion, and how each one can affect your retirement in different ways. So if you've really enjoyed this video, hey, we invite you to give us a like on our Facebook page. All you got to do is simply click the button at the bottom, take 30 seconds. We appreciate the support and the encouragement. If you want more information, go to our website, www.apgky.com. There's some retirement tools and calculators on there that can really help you with your retirement planning. If you want, you can shoot me an email, my first name Terry, at apgky.com, and I will be happy to respond to you, and it'll be a response within 24 hours. So you guys, until next week, have a great one, and we really love the encouragement and support you're sending our way. Thank you.